Just kind of lounging today. I wasn't even sure if I was going to post a video as I just kind of sit here and watch markets, figure out what they're going to do. We stand by. But I came across this article and I was like, for the few people that are going to see this video, it's probably worth posting this video, discussing what's going on as an urgent reminder. And really, it is urgent. If you're in the crypto space and you plan on staying in the crypto space for some time, this is huge. So let's just look at this. Bad news for thousands of crypto investors. They don't own their account. A judge rules that Celsius owned their money. For context here, we're talking about approximately 600,000 accounts, hundreds of thousands of people, everybody. More than 500,000 people who deposited money with collapsed crypto lender Celsius network have been dealt a major blow to their hopes of recovering their funds, with the judge in the company's bankruptcy case ruling that the money belongs to Celsius and not to the depositors. And this is just a gleaming example of not your keys, not your crypto. We see it all the time on crypto Twitter, crypto YouTube. It's not just a cliche, it's true, and hundreds of thousands of people potentially learning that lesson right now. The judge, Martin Glenn, found that Celsius's terms of use, the lengthy contracts that many websites publish but few consumers read, meant the cryptocurrency assets became Celsius property. Now, this is obviously in regards to Celsius, and maybe you weren't affected by Celsius, thankfully, but this isn't the only exchange. There's other exchanges that have similar terms, and there's probably going to be more and more exchanges that have similar terms. There are many other platforms that feature terms of use that are similar to Celsius. Customers need to understand the risks that they are taking when depositing their assets onto insufficiently regulated platforms. Now, here's the thing. There's another exchange, a huge exchange that many of you might use. I use it all of the time, that has kind of similar terms. I was kind of reminded back earlier in the year when this was making big headlines, Coinbase. Coinbase discloses customers could lose their crypto if it ever goes bankrupt. Now, when I saw the disclosures and the terms and all of that, I didn't think Coinbase was going bankrupt. But we see how these huge platforms, these huge companies that are indestructible in the minds of markets and crypto holders, we see how they have fallen, right? We've kind of lived through that in 2022. Celsius, Luna, most recently FTX, and just the domino effect that that has had. So back here in May, Coinbase, one of the largest cryptocurrency exchanges, released its first quarter earnings report Tuesday and included a new disclosure to customers. Now let's look at the disclosure, especially if you're a Coinbase user. Because custodially held crypto assets may be considered to be the property of a bankruptcy estate, in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. This could mean, in the case of bankruptcy proceedings, that customers' balances might be considered Coinbase property according to Business Insider. Now, obviously at the time, Armstrong kind of went on to Twitter and was just basically defending Coinbase, making sure everybody knows they weren't going bankrupt. But we can't have just blind trust and blind faith in these huge companies, especially after what we've seen happen in 2022. I came across this quote the other day I thought really applied to the situation here, and really just our time as crypto holders in the crypto market, the volatile waters of the crypto market. The quote goes like this: "Trust because you're willing to accept the risk, not because it's safe or certain." If you are going to leave crypto on any exchange and you have that trust within you, just make sure it's because you're willing to accept the risk. You're willing to accept, hey, I could lose it all. Make sure that's the foundation of why you're leaving crypto on the exchange in the first place. Don't let that trust be based off of just blind faith and blind trust in the company itself. We've seen how little trust any of these companies deserve from us as crypto holders. 2022 was a big lesson in that regard. So if you're going to trust, if you're going to leave your crypto on exchanges, make sure it's because you're willing to accept the risk, not because it's safe or certain. Because I can tell you one thing, it's not safe and it's not certain at all. So as we wait for markets to move, we wait for the bear market to end, I think now is a good time, and we can use these times in this boring sideways bear market to just kind of evaluate our position, not only in terms of our portfolio, but where is our portfolio? Are we protecting it? Are we planning for our long-term future as crypto holders? I appreciate you all watching. Hit that subscribe, hit that like. I'll see you in the next video. God bless.